All right. The Trump trade. What is happening with rates, stock markets, Bitcoin, and gold? Some rates are going down. Some rates are going up. Real estate's expensive. Seems like the economy is strong, but then employment is like going on. And then we got election. What is going on with the Trump trade? Why is this happening?
I think right now we've got this unprecedented shifts in the market. We've got inflation fears. You have the presidential election. We've got politics influencing things. And then economists looking around going, what is happening? These extreme events are happening, and really why? So I think what you and I want to talk about was just the All In podcast real quick and kind of what those guys were thinking, because I think they nailed it.
For sure. You want me to read off all these kind of points?
Yeah.
So the All In podcast is a show that's hosted by a bunch of billionaires. I don't want to go through all their names because I don't want to get it wrong, but they're very smart, very successful, and they share all their information and wisdom kind of in real time. I don't want to say 100%, but a lot, and they're very transparent. And recently they talked about how, number one, bonds are causing U.S. Treasury yields to rise.
Yep, because they were falling.
Yeah, because they were falling, which was a good thing for mortgage rates. But now they're rising, and that reflects the market sentiment. Gold prices are spiking, which almost is always a sign of inflation going up or inflation's about to go up. Bitcoin is shooting up, not in a crazy way, but it is going up. And the reason that's significant is because that's usually a escape to a safe haven. Yep. So when things feel safe in the economy, people might not be investing in Bitcoin. But if Bitcoin's going up, it means like people are reallocating their funds. Equities, aka stock market, is shooting up, which again, that's very inflationary.
Yep.
You know, normally the Federal Reserve is lowering rates as the stock market is crashing or about to crash or something. There's a crack, but it's going up. So why is that? And then the final one is the US dollar complex is rising, aka the dollar is really strong. You're going to kind of have to explain that, but like the summary that I remember from the podcast is it means the United States is strong.
Bingo.
And I actually have my thoughts on why that is. But again, if the U.S. is strong, that seems like it's a great thing, but this is a real estate podcast. And what do we care about? Mortgage rates. Yeah. It might not be the best thing for mortgage rates, even if the Federal Reserve is lowering rates. And that is the big question. Why are they lowering rates, but our mortgage rates are so high?
Yeah. Generally speaking, as bonds fall, their yields rise. But you don't have all of these moving in the same direction. You don't usually have a bond yield going up, gold prices spiking, Bitcoin spiking, equities spiking, while the dollar is all getting stronger. Those usually move opposite. So as all of those rise, it causes brilliant people like the hosts of the All In podcast to look around and go, what is actually going on? What's brewing in the background? And we know that the presidential election here in the United States is causing turmoil because it's causing fear, uncertainty, and doubt. And that we're the largest economy in the world. So everyone's paying attention to us and what we're doing. And Chamath Palihapitiya, he said it best when he said, this is the financial markets repositioning themselves from what was a toss-up to a Trump win. And so all of a sudden you have all of these indicators now moving, instead of in opposite directions, they're all moving in a similar direction. So then you go, well, why? What's happening? The thing to remember about stock market, the bond market, any of these markets, is they are forward-looking indicators. So they're betting on a future outcome of what they believe is getting ready to happen. Chamath then said, there has been a clear decision that the Trump plan will drive more economic growth than the Harris plan. I believe what he was implying there was the market was deciding that they believe Trump was going to win. They were then deciding that's going to create more growth, and then they're reacting accordingly. Well, what does that mean? Trump's plan is probably slightly inflationary, like we've talked about on previous episodes, like we talked about in the real estate breakdown of their policies. His policies are probably slightly inflationary in the short term, the tariffs. And so what that does is that causes inflation fears to rise. As inflation fears rise, they go, gold is a safe haven, Bitcoin's a safe haven. And that causes bond yields to rise. That's what caused rates to rise. So if you look at this, one, go back to your question. Why did rates fall? The bond market baked in too many rate cuts prior to the Fed. They were baking in like 7. Then the Fed cuts 50 basis points. Almost after every Fed cut, the rate will pop back up because it kind of pops back up. It buoys its head up, finds the new normal, and then starts to filter its way down. But the problem is when it popped back up this time, the next week we got hit with, or 2 weeks, good economic data, good economic data, good economic data. So what happened then is our rates basically shot back up to 7. But rates, gold, Bitcoin, and the stock market don't always move in tandem. So these guys go, oh, interesting. The market is literally saying Trump's going to get elected.
And can I summarize that too?
Yes,
kind of
please.
like 5th grade reading level, because this is really fascinating. There's an actual example of this happening in relation to Trump. So this isn't just something that they, like came up with out of nowhere. The summary is people are betting that Trump's going to win the election.
Yes.
And because of it, business is going to be booming, and so they want to get in right now before it like takes off. And they actually have a example this happening when he had the attempted assassination. Bitcoin skyrocketed. It ripped. Other things ripped too, because at that moment when he survived that, people thought, oh, there's no way he's losing this election.
Yeah.
And so they're betting, okay, because of this, Republicans, conservatives, Trump being a businessman, they thought this is going to be great for the economy. This is going to be great for stocks, other investments, and even, things like gold and Bitcoin. So this is just a follow-up now that people feel, you know what? I wonder if Joe Rogan had anything to do with it. That like people are like watching them like, man, he's just in the flow. And
how many views did he? It's like Trump and
get me
Rogan
started.
broke the internet.
Don't get me started on YouTube stuff right now.
I want to go on this for a half a second because Trump and Rogan, they broke the internet there. From your expert opinion, someone who's done YouTube for decades, who hundreds of millions of views, what was that and what impact did they leave right there?
So, I obsess over YouTube. I wrote a book called YouTube Secrets, and by no means though do I know everything about the platform. And in fact, I try to tamper my expertise for things like politics. But I actually made a statement before the Joe Rogan interview. I said, hey, I think it's going to get a lot of views, but it's not going to be as much as people say just because he's been on the other podcasts. And like Joe Rogan, I know he's a big, influence, but I mean, like it's near the end of the elections.
Yeah.
Never in a million years did I think it would do 24 million views on YouTube in the first 24 hours.
Insane.
And it's gone on to, I think it's eclipsed, and Nucci, tell me if this is true, over 40 million views in a matter.
It's at 40 right now.
Okay, it's at 40 million. Thank you, Nucci. 40 million views. And the reason this is actually really important in relation to this conversation, I was kind of joking about it, but I'm kind of serious. I believe that 3-hour conversation with Joe Rogan on the biggest video platform actually did make a difference, and the numbers don't lie.
Yeah.
See, the thing is in politics during election season, politicians have to go to different media outlets. In the past, sometimes some podcasts, but usually they're short, right? Like Harris right now is known for her hour-long show. 3 hours. That's just never happened. There's never been a
president.
Like with a regular person.
Bingo.
I know Joe is not a regular person, but like he is in relation to politics and even the media. He's like the everyday dude that you can talk to. And Trump went on there for 3 hours, and then it gets not only 24 million views, but in the matter of days, it's up to 40 million. It is, in a way, breaking the internet, because there's definitely Mr. Beast videos. If you don't know, he's a famous YouTuber, and other creators that do really well, but not 3 hour long political conversations with a candidate. And this is proving, one, people care about it. People are still fans of Joe Rogan, and they want to know what Trump says. And the summary of all of it is, I actually think it did tip the scales, because around that time is when the Treasury yields really started ripping up.
They went extra vertical.
Exactly. Now, it's not just because of that. It was a lot of different things.
Sure.
People are just feeling really comfortable with the decision to bet money that Trump's going to win. And that's just a actual example with data, because on the reverse side too, I'm not picking sides here. I'm just using an example. The big podcast for Harris was Shannon Sharp. He has I forgot what it's called. Maybe you know what it is, Nugely. The Shannon Sharp podcast, right?
Club Shay Shay.
Club Shay Shay. Thank you very much. Nugely in the background there. Club Shay Shay did a 1 hour podcast with her because that's kind of her thing. Yeah. She wants to go on Joe Rogan, but only for an hour and not in his studio, whatever, right? Whole different story. But you would say this is kind of like the more left-leaning podcast, even though I don't know if he's
Joe's really left.
But
his
moderate. Audience is starting to lean more right.
Yeah,
okay?
got it.
It doesn't actually matter. There's a reason why she didn't go on there, but she'll travel to Shannon Sharp. We don't have to get into the reasons. Point is, you could almost compare them, because Shannon right now is on a rise up.
Cool.
Right? Huge influence.
Yeah.
And this is still an hour-long conversation with a current vice president, potentially the first female president of our country ever. Barely 1 million views.
Oh, really? I didn't know that.
Barely 1 million views. So think about it as somebody that wants to bet on the election, which this is happening this year uniquely, right?
Yeah.
If you had to bet, which one are you going to bet on more? The guy that got 40 million views on a 3 hour long conversation.
Yeah, 3 hours.
3 hours, right? And it's going to keep going. That's the crazy thing. I was like, there's no way it's going to be Joe's top podcast ever. It's definitely going to be his top podcast ever, right? Wow. Right now it's at 60 million, the first one. But Trump's just freaking went right through all the top 10s. And then you got Kamala Harris over here getting 1 million views. Now she's doing other shows. I'm just saying, if you're having to bet, that's just one example in my little world where I do have some expertise and insight. Yeah. I'm telling you, people are seeing the numbers. And that's why this whole Trump trade conversation is really significant, because people are putting their money, you know, where their belief is. And then you see this on the betting markets too. On the betting markets are really betting on him winning. And so you combine all of it. I'm not saying he is going to win.
No, I'm just saying, I think it's a tighter race than these markets are betting.
But people that want to invest money and bet money are saying he's going to win. Yeah. And that's why, even though all this you would think is based off of the Federal Reserve and mortgage rates or the economy, or, you know, what's happening in global politics and geopolitics, actually, it's just people feel comfortable and confident he's going to win. So does that kind of answer your question about the Joe Rogan podcast?
I love it. So to flip back, right? People are repositioning their financial assets. They're making bets with their money, stock market, gold, Bitcoin, bonds. Then David Sachs comes in and points out something that is very interesting. Top investors like Paul Tudor Jones and Stan Druckenmiller are betting that inflation is going to get higher. So they've been pushing money into gold, pushing money into things like Bitcoin, and that's what's also causing, because these are guys are kind of famous bears. So, you know, they're kind of worried about the bear scenario, that inflation will be around for longer. Next, they kind of went over this idea of inflation concerns and the asset response. And so if we have rising inflation, and because you're seeing that with gold, you're seeing that with Bitcoin, you're seeing that with the bond yields, then what David Friedberg and David Sachs both go into next is they start talking about, well, how do we pay our government debt? Because if bond yields are high, the amount that we're having to pay to our government debt is something like 10 to 15%. I think the actual number is 12 of all tax revenue just goes to pay for the debt. So we've got to get those numbers down. So short term, this inflation concern, this bet by the stock market, this bet by the financial markets may actually pinch us and keep rates higher for longer just to kind of tamp out these fears because the market's betting so much right now. The last thing they went over was, okay, well, what's your investment strategy, boys? So David Freeberg did a phenomenal job. Well, okay, guys, what are you investing in now? And then, despite this economic turmoil, despite where things are going, where are you investing? And I think Jason Calacanis said it really best. He said, hey, focus on time in the market, not timing the market. And that's such just freaking ageless, timeless wisdom right there. Because all of us look at things and we go, I want to get rich quick. Bitcoin is mooning. Gold is surging. I should do it now. What you should be thinking about is, where do I feel comfortable placing money for the long term and having it be there through the moons, through the ups, through the downs, and just working on it over a long period of time. So I really enjoyed this. I sent it to you for you and I to talk about it, sent it to a few other friends. I sent it to a very large developer in the area. And he calls me back and he said, that was an astounding podcast. Thank you for sharing. And I said, sir, what are your feelings on it? What are your thoughts? How are you changing your strategy? He goes, why would I change anything about my strategy, Anton? I'm a real estate guy. And I said, well, what do you mean?
Like a wizard.
Yeah, the wizard's talking. And he goes, well, if we're looking at land and land development and we know we're going to have inflation higher for longer, does that help or hurt me? And I go, oh, it totally helps you, because if we have higher inflation, it means asset prices rise, it means real estate prices rise. Now, of course, the cost of construction, the cost of the land development, the cost of the labor, that's all rising too. But if you have the project tied up at good terms, long term, and you're working through it and getting the entitlements, this short-term inflationary problem that may be created by Trump is outweighed by the long-term potential economic benefit. And he's like, real estate's my hedge. Go buy more. What questions do you have about this?
Well, I think that it's more of a comment. And then I do have one more question for you. Jason said time in market versus timing the market.
Yeah.
Part of the wisdom of understanding why that's so important is because when you time the market, people are timing it when everybody's jumping on the bandwagon. Why all this kind of sounds dangerous to me is because we're talking about things like Bitcoin and gold and even the stocks, which can be very volatile. But this happens also in real estate.
Yes.
So as people get more comfortable, it could potentially happen. It's happened in the past. This kind of skyrocketing of rates and assets is actually could lead to a cliff potentially, right?
Yeah.
Short term, long,
Yeah.
whatever.
Yeah.
And that's why the time in market is so important for real estate, because this is kind of unheard of happening, right?
Yeah.
We even talked about this.
We use the word unprecedented. Economists are scratching their head going, this shouldn't be happening.
In October, it doesn't happen.
Yes.
Typically, on average. And so my question for you is this: what does that mean for real estate? What would you say based off of what you heard these billionaires talking about, and also just like talking to other people that are in the market? If this goes as people think and Trump does win, and then this is what's crazy, people are going to jump in maybe like real close to it, or maybe when he does win, just like when he had the attempted assassination, it could skyrocket. What's going to happen in real estate, and what's your last advice for people listening to this in relation to their real estate decisions?
Absolutely. This is short-term inflationary. Absolutely. This is rates higher for longer. So that's lower transaction count like we have been. Don't expect a spike. Don't expect a spike in demand. However, let's just say he did win and he takes office. All of a sudden, second quarter, third quarter, as the market finds its footing, it feels its stability, and these inflation fears subside, you could see rates start to trend down again. So my feeling Mid fives is still possible. We had a live yesterday with Tony Blodgett from NAF, New American Funding. He felt the same way. I felt it before even asking him, but I wanted to hear from one of those experts.
Mid 5% interest rates for mortgages
Next year.
next year.
Latter part. Okay. And I guess I should say, we've talked about this part before, and I need you to pay attention, please. This is the great asset melt up. If all these asset classes are pushing in an upward direction, if real estate values are rising while things are getting harder to transact, and they say the economy is okay, but the average consumer feels really freaking pinched, and we know inflation's still a little bit hot, this is the great asset melt up. We told you this was coming. We've been talking
About a year now.
About a year and a
You
half.
did the little K-shaped drawing and everything.
Bingo. We talked about the K-shaped recovery. This is the example of that. This is go buy assets because assets are going to continue to rise. Inflation is going to be slightly hotter than we want it to be long term, which causes asset prices to rise. So you need to get into the asset game. Real estate, stocks, bonds, Bitcoin,
My
gold.
Corvette. Can I buy the Corvette finally?
You can buy the classic Corvette?
Yes.
Go, absolutely.
Okay, but not the new one.
There's no indication.
No jokes, Nuccioli. I know it's an old man's car.
There's
Get the
no indication,
911.
though, that the new one is going to hold the value that the old ones do. And so right now, if you look at cars, I got fed a TikTok this morning that I recorded in 2022. And on TikTok, I said car prices are going to get obliterated. That TikTok got 130,000 views, and half of the comments, they're calling me an idiot, and they're telling me I'm wrong. And car prices, used car prices, have literally dropped 30%. The trend is your friend, people. Follow the data. And see, you won't get all the bumps right. You won't get the peaks and the valleys, but you'll get the overall trend. And the overall trend is we're going through the asset melt up. And one of the other things that we're going to record that you guys are going to be able to watch is we've talked about this prices nationally, and we've talked about prices here in the Seattle Metro and our predictions for 2025. And you can see, just to summarize that real quick, prices are going up in the face of high interest rates due to the lack of supply and other factors. But that's also part of this asset melt up, brother. That's what's happening in front of our eyes. We, you, me, our listeners, our subscribers, we need to buy more assets. You need to be prudent and have good cash reserves, but you also need to get more assets to protect yourself. During the great financial crisis, about 5.4 trillion was put out on the street through all of the stimulus, the Fed, all that. We put over 13 trillion on the street with this one. We're going to have a melt up because of it. That's my opinion.
Meaning assets are going to go up, including home prices.
Correct.
By now.
Or pay more later.